Good morning and welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Greg Newman, Senior Wealth Advisor and Portfolio Manager at Newman Group, Scotia McLeod. He'll be joining us for the hour. In 30 minutes, we'll be joined by Laura Lalonde, CEO of Gridbank, to tell us how her company aims to monetize the videos and photos sitting in your camera roll. Do we have camera rolls still? And we want to hear from you this morning on First Call. Reach out with your questions on North American equities, and we'll have Greg answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address, if you want to go that route, is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Shares of BlackBerry are up in the pre-market after the technology company posted fourth quarter sales that beat estimates. You can see it's up nearly 10%. That beat coming off the results. BlackBerry raised its revenue outlook for the first quarter. The CEO says the business is highly regulated and delivers mission-critical solutions. He says that position strengthens the company against generic AI products. G Mining Ventures is set to buy G2 Goldfields in a deal valued at roughly $3 billion. The company calls the transaction a uniquely synergistic acquisition that will create a Tier 1 gold mining hub in Guyana. Executives say the combined projects in the region will deliver significant results. They say shared infrastructure will lower operating costs and increase production. Roots swung to a profit in its latest quarter as sales topped expectations. Revenue rose by more than 5% and margins improved. The Toronto-based clothing retailer launched a strategic review last month that could include the sale of the company. CEO Megan Roach says the company is pleased with the level of interest and engagement in the process. And now our top line story. Oil is rebounding after its biggest one-day drop since 2020 as tensions still simmer between the U.S. and Iran, and Israel in there as well. U.S. President Trump saying U.S. troops will stay in the Persian Gulf ahead of talks this weekend, while Iran is warning of fresh risks in the Strait of Hormuz. For more on this, let's bring in our guest for the hour, Greg Newman, Senior Wealth Advisor and Portfolio Manager at Newman Group, Scotia McLeod. Greg, thanks as always for joining us.
Roger, great to be here.
Just another day.
Just another day. Here we go again. Drama. But really trying to figure out where oil goes here is key, because where oil goes is where the market's going to go over the next couple of weeks and beyond. So does anybody know for sure here? Of course not. Does Trump?
That's why you're here.
Right.
Tell us.
Right. Well, I'm going to tell. I'm going to tell you what I think is the more probable case. Mm-hmm. I think we learned more Tuesday night than we knew before on Monday night. What we saw was that this regime, the IRGC, does have a breaking point. And what does it really want at all costs? It wants to project power.
Yeah, and stay in power.
And stay in power. And if you take away their power plants, and if you cut off Carg Island, which is 90% of their revenue, you take away their money. So if you take away, to put it simply, if you take away their money, they lose their regime within a matter of months.
Yeah, oil is their funding.
So this is their key. So this is Trump's trump card. Now, unfortunately, if he goes ahead and does it, it means that oil's offline for a while, at least coming from Iran. So they could take Carg, blockade Carg, keep that money from flowing, break the IRGC. IRGC does not want that to happen. Trump is willing to do it, I really believe. They've done it.
But do the Americans want troops on Carg Island?
Don't think they need them.
You think they can just take it over from air?
I think that what they can do is they can blockade it with a naval blockade around it and let ships get through. What does that do to the price of oil? Soars. What does that do to the economy? It hurts the economy in the short run. But, you know, and our thesis is that as long as you have oil prices settling out within the 3-month time frame, say by Memorial Day or end of May, then it still won't be enough to really hurt the economy long term, and the rate path can still be in shape for the rest of the year. So I think it's an arm wrestle, and I think that the U.S. has the upper side. So I think you're going to see noise out of Iran.
Of course, they have to.
And you're going to see, Israel keep doing that, prosecuting their thing unless they're told to stand down. And I think what you're going to see is this deal more or less hold and traffic more or less move better. Not perfectly as before, but a de-escalation. So that's what I'd be looking for the next 2 weeks.
Well, and I think Israel is to a degree standing down because Lebanon to them is almost a completely separate thing. It's tied in, obviously, but that's a very different thing. That's personal, and they want to take that out, so they have some safety on that side.
Yeah.
Whereas Iran, I think they may.
Yeah, and the funny thing is that Iran is not to get political, but Iran always says, "Oh, that's not even us. That's not our theater." Then all of a sudden they tie it into the war. So. Talk out of both sides of their mouth.
So we saw that massive drop in oil yesterday, almost 20%, around 20%. Today it's inching back up. It's up, I think, 3 or 4% last time we saw it.
Yeah.
4.7%.
I would say that, yesterday it wasn't like an all clear. You wouldn't expect it to be an all clear. You'd expect this to be messy. There's going to be drama on Saturday. I think last week was a pretty key week. Oil prices were going higher. The war was getting worse, yet the markets still did okay.
Were going up. Yeah.
So that was a bit of a sign that we probably hit at least a short-term bottom. So I think that it's healthy after yesterday's biggest rally, I think in I don't know how long, to have some erosion here, to have oil back up, to have a bit of a gut thesis. But I think you're probably going to see a more positive tape. And I think if I had gun to my head, I think that we're going to fend off this negativity and probably end up positive for the day.
All right. Well, see, they're kind of bouncing around. They're on the plus side. They were a little while ago.
Well, no, they're negative right now, but that's okay.
Okay, now they're back to negative.
No, they're negative. They're negative, and so that's a big call. I'm saying that I think oil.
You're talking about the markets.
I'm talking about oil probably going down a buck or two, and I'm talking about markets probably closing the day positive. So yeah.
So you think oil is going to drop today?
Well, it's 99 out to $4 right now, but I think that's too cute to call it. But But anything, I think you're going to see as people start to see that there's more likelihood this deal will hold, that the U.S. really does have the leverage. Oil prices will probably, at least stay here, not go up much higher, and the markets will go higher.
Well, even in this situation, you can almost look at it like a dollar or two up for the oil is still almost going down in some ways.
Like a what? Say that again?
Going up a dollar or two, like maybe a half percent, 1% is almost like it's going down, really.
Right. Yeah.
In this situation.
Well, that's right. It's like at a casino when you push. When you don't lose or you don't lose as much, it's a good thing. So like rather than $120 oil, if we're talking about $96 to $99 oil, that's not so bad, right? If it's dancing around.
Until you go fill up at the pump, and then it's.
Well, yeah, that's a different story, but yeah.
For a different time. We got to take a break right now, Greg. We'll be back up with a look at the markets before the bell. Let's see how things are shaping up on the markets. We'll start with the U.S. futures after that gangbuster day. A little more cautious today. Oil is inching up. We'll talk about that in just a second. But right now, you see the markets are off, but they've been pushing towards flat right now. And Dow down by 0.33, NASDAQ by 0.1, and the S&P 500 off by 0.22. Asian markets, how do they end up for the day as they try and unravel everything? You can see they are bouncing back a little bit from yesterday. No real surprise. The Nikkei had a huge day yesterday. Today it's off by 0.73. The Hang Seng by 0.54. And the CSI 300 by 0.64%. And Europe, you'll probably see a similar situation. There you go. It's just kind of all over the place in the red, but everybody finding their place right now. FTSE down by 0.2. CAC 40 down by 0.64, and the DAX off by more than a point. Now, the TSX yesterday was nice and green, up by 1.15% to 33,620 right now. So it's kind of continuing to rally over the last week or so. And who were some of the movers and shakers? Aritzia on their earnings, 9.5%. Hudbay, 8.23%. Going the other way, Baytex down by 7.56%, and Parex Resources off by nearly 9.8% for them. Taking a look at the metals. Yeah, they're on their way down right now in response to everything that's unfolding. Gold off by 0.16, so not much, still above 4,700. Silver off by more than a point at 74.58, and copper's down by 0.9% at 572. Western Canadian Select. Take a look at this yesterday. Yeah, that was the dip, down 10% to 71.55. And we look at today, though, for that was Western Canadian Select. WTI today, it's up nearly 5%, pushing towards that $100 a barrel mark. Well, the Buy Canadian movement has skyrocketed over the past year amid Donald Trump's tariffs and global trade uncertainty, but international trade partners are now pushing back, arguing it creates barriers and distorts competition when they try to get into Canada. Let's bring back Greg Newman of Newman Group, Scotia McLeod, talk a little bit about this. You can't win for trying, can you?
Yeah, well, what are we supposed to do? What's Carney supposed to do here? We're in this situation where everybody seems to be gating, and I don't know. I mean, what? The other thing is, okay, so Europe's not happy. They seem like
there's some others. Japan as well. The U.S. was the one that openly talked and really let us know about it. But Japan's
is that right? Japan's on board as well.
Yeah, they're not too excited about it. So New Zealand, you want to keep New Zealand.
Yeah, no, New Zealand, they're good guys. Look, they're all good guys. Why? It's a greater pie if we all buy from each other. That's the truth. So that's ultimately where it's going to go. What are the enforcement mechanisms? Is this mostly just performative and making statements? Is there really going to be any follow through here? To the U.S., I think you got to be careful because CUSMA is coming up for review, so we really got to watch what we're doing there. But it is a fair comment. I mean, if we studied economics, in school, what we learned is that don't beggar thy neighbor. Buy from each other, and we'll all specialize and do what each other does best, and then we'll all be richer because of it. It'll be an expanding pie. That's the truth, even though it looks like we've had a step back in the last, couple of years with Trump. That's ultimately the way we're going to go. Yeah. The United States is going to be richer over the next few years, and it's going to help the rest of the West be richer as well.
Let's hope. Let's hope we all benefit from it, too.
Well, I think so. I think that...
I was just talking to a friend in the film industry, and he said they're starting to see a little bit of a pullback here. The big companies, the big production companies are kind of pulling back to L.A. and to Hollywood.
Well, yeah, listen, there's...
so there is an effect, and the longer this goes on without any kind of a deal, the more...
There is tremendous pressure and you've seen it with the auto sector at the margins, and you've seen a lot of U.S. companies that respond and are... following the Pied Piper, and you are seeing $18 trillion go into the U.S. But in short term, that can really hurt. And I think it's critical that we have a proper CUSMA agreement that gets followed through. Without that, we're really in trouble. But assuming that, if you have a U.S. that is well-heeled, on its way to really good growth, it's an engine for Western capitalism, and it'll help Canada over time.
And with these complaints, do you think can Carney? I mean, will it change if he has a majority government, which he's pretty much on the verge of now?
Yeah,
is right around it, and then with these two by-elections, like 2 of the 3 looks like they're going to win. That'll give them the majority. Does it change how he approaches this? Can he find a balance between Buy Canadian and we're going to drum up business elsewhere?
It's a really, really good question. That's probably why he's the guy who's leading this thing, because
you and I don't want the job.
I don't think I want to be making those decisions. Those are really hard decisions to be making, to really strike that balance and to strike it well. He has his electorate. He has the Canadian population. He has the sentiment of us all that's been like riding up and down, So it's a tall ask. It's a tough job, but he's been doing a pretty good job in the economy, and I give him credit for that. So hopefully he'll be good with this one too.
I think this is going to be a challenge. If it turns out to be the majority, it's going to be a challenging 4 years for them for sure, no matter how.
Well, listen, anytime you hand a majority to one party, it's a different equation. And you're talking about, what are they going to do to capital gains tax? Maybe that's in play again. What are they going to do to our taxation? Are they going to bring in a wealth tax? It wasn't so long ago that we were all worried and talking about that sort of thing. Those things were not going to happen when they didn't have a majority. So it is a different calculation, and it is a different conversation. And some parties are a little bit more concerned because of that.
I think a lot of parties may be concerned about that. But can you see the WTO doing anything on this? or is it mostly just posture?
Listen, I don't know. I mean,
Putting you on the spot as being the WTO expert.
WTO expert, yeah. My real bailiwick is stocks and bonds and how they react. And seriously, what oil is more likely to do in the next 2 weeks. On the WTO, I would say a lot of these organizations, just stepping back, they talk a lot. It seems like they talk a lot, and it seems like they're very performative. There's very few that actually do and act. And so that would be my best answer on the WTO.
Well, how will the markets react to this at all, do you think, or is this just chatter?
No.
Just chatter?
No. Listen, people, markets are taking their cue from the U.S. 10-year. They're taking their cue from the price of oil. They're taking their cue from U.S. employment growth numbers, GDP, and really, most of all, interest rates outlook and earnings. That's it. That's what markets are looking at. This stuff at the margins is interesting, and it might affect some sectors here and there, but it's not really meaty.
All right. We'll leave it there on that note. And up next, we'll be back with Greg Newman to see why Invesco QQQ Trust is on his radar. Did I say enough Qs there? Time now to see what's on the radar for Greg Newman of the Newman Group, Scotia McLeod, and we're talking about QQQ.
Well, I think this is a real important one to be looking at. Right now, I think this is the canary in the coal mine. Reason why is, look, people ask me about gold, whether that should go higher or not. And whether gold goes higher here is a function of what price should it be at, and therefore, what is the investor appetite going to be for gold to drive more gold? Something like the QQQ is anchored in math. It's anchored in valuation, and it's anchored in growth. And it's got both. It's really trading at very modest levels right now, and it's got excellent growth rates. Yet, it hasn't done well year to date due to software concerns, due to private credit concerns, maybe, enhancing American trade and people taking money off and it being so maybe crowded. But the reason why it's the canary in the coal mine is it should go up. It should go up soon.
Yeah.
And if it doesn't go up soon, it means that the market is seeing, okay, worse dangers ahead, that actually inflation and recession odds are increasing. And we know that they have increased due to this conflict and higher oil prices, and they've gone from 15% to up to maybe 30%. Base case, though, is that it doesn't happen. So I'm calling for, I think, much more than likely, this sector, the QQQ, rallies.
Okay.
But if it doesn't, it means something.
I'm just looking at a number from this morning. Added a net $2.51 billion in the Trust Series 1, the latest session. It's at $392 billion, according to Bloomberg, the terminal. It's attracted $12.7 billion in the past year.
Yeah. Good? So yeah. But what this is, okay, that's all fine. But what is this? This is the Mag 7 Plus.
Yeah.
I mean, this is your plus all the other guys that are in there that are also very meritorious. This is your best index if you want growth for the next 100 years. And is it always the best place to be? No, it hasn't been, as you've had this broadening out, and Mag 7 has been soft, and that's great. But the risk reward is excellent for this name right now. So, and as I'm saying, if it doesn't go up, then it means that market participants are seeing weakness, deeper weakness, and they're seeing that this is not just a corrective phase.
Is there anything similar to it?
That's a great question. I mean, yeah, the sum of the parts. I mean, I would argue the same thing for NVIDIA. I would argue the same thing for Google, Meta, Amazon right now. So are there other things in Canada that equal that are as good value, that have a 20% growth rate and that are trading at around 20 times? That's what this is.
Yeah.
Is there anywhere in the world like that? I don't think so. I mean, occasionally you'll find one like TransAlta right now that sets up like that. But is it going to do that for the next 5-10 years? No, it's going to do that for 3 years. So you have these names that come into that. In Canada, maybe what fits that bill might be like Atkins Israelis, like a ATRL, something like that. But still, not as compelling as these names right now, which is ironic because the whole world owns them. The whole world's watching them. So why are they this cheap? Well, that's what markets do sometimes.
They're just, I think, well, I mean, the AI is the huge driver right now, and everybody, I think, is a little concerned about the return on it.
And rightly, I mean, people are asking, what is the, if Google was spending $80 billion last year, and now they're spending $170 billion, what is the payback time? How do we see that? And a lot of people, like you and I, have memories of 2000, that bubble, JDS Uniphase. Very smart people back then.
Nortel,
they went over the top, right? And they just kept buying. They didn't see the weakness in the abyss. So to have a respect for that is absolutely necessary, but I think that they're too early.
All right, and what are you doing with it right now?
I'm buying it.
Buying?
Yeah, we own it, but I think you want to be buying more of it now.
Okay.
Yeah.
Take a break on that note, but still ahead, we'll talk to a new company that is looking to reshape how data is created and who gets paid for it. We'll find out more. And our phone lines, of course, will open soon for our first call segment. Reach out at 1-855-326-6266. You can also send us an email. It's at firstcall@bellmedia.ca. Shares of BlackBerry are up in the pre-market, about 10% right now, after the technology company posted fourth quarter sales that beat estimates. Coming off these results, BlackBerry raised its revenue outlook for the first quarter. The CEO says the business is highly regulated and delivers mission-critical solutions. He says that position strengthens the company against generic AI products. G Mining Ventures is buying G2 Goldfields in a deal valued at roughly $3 billion. The company calls the transaction a uniquely synergistic acquisition that will create a Tier 1 gold mining hub in Guyana. Executives say the combined projects in the region will deliver significant results. They say shared infrastructure will lower operating costs and increase production. Roots swung to a profit in its latest quarter as sales topped expectations. Revenue rose by more than 5% and margins improved. Toronto-based clothing retailer launched a strategic review last month that could include the sale of the company. CEO Megan Roach says the company is pleased with the level of interest and engagement in the process. And a quick peek at the markets right now. You can see they're clawing their way back to neutral. Dow is at 0.36%, still down, but down 0.36, and NASDAQ off by 0.1214, and the S&P 500 off by about a quarter point. A Montreal-based startup is betting that the videos sitting unused in your camera roll actually have real economic value. Gridbank just raised new funding to turn everyday clips into paid content for brands, raising broader questions about monetizing data, user-generated content, and the next phase of the creator economy. We're joined now by Laura Lalonde, the CEO of Gridbank. Laura, thank you very much for joining us today.
Thanks so much for having me.
Okay, explain how this works. How is this everyday people that can take advantage of this?
Absolutely. So Gridbank is designed for the everyday non-influencer, non-professional to upload the videos that they already have on their phone to make passive income.
And who are you competing against? Like, there's established companies that are doing this already or no?
So we operate, I would say, broadly in the media licensing space. Our differentiator is that we are really going for the everyday person, not the professional, not the influencer. This is really an app that's designed to be a fun and passive and easy way for people to make money off of the videos that they already have.
How do people, like, my kids, for example, that aren't, active in the media, find you and monetize on this?
It's super easy. We designed it that way. You go on the App Store or the Play Store. Our app is called Gridbank Creator. And start with just any of the videos that you already have in your phone, a variety of stuff. My dad actually makes money off of his video of his brown Labrador, Jasper, running in the snow up at the cottage. So really anything you have can actually have commercial value to our customer. So you download our app and upload the videos and then see what works for you and then start uploading more from there.
And is the model that you're getting paid by the advertiser that is connected to that, or are people paying to see your dad's lab?
That's correct. So I was the customer for GridBank. I really, really needed everyday videos from people when I was working in advertising. So we have many other clients that also feel this same burden. They're looking for this type of very real, authentic, this texture of reality type of stuff. We're able to offer that in a very large database, and the person gets paid once their video is used and downloaded.
So who owns the content then? Do the creators maintain control over that? Do you own it, or does the company that's buying it from you own it?
The creators still own the content, actually. This was an important part of the licensing that I wanted to make sure that we kept people's dignity and their ownership of their own stuff. So with GridBank, what we're really looking to do is kind of flip the script where people can participate in technology, but also profit from it, earn from it in a dignified way.
And so it's not evergreen. Once somebody's bought it, they can use it for as long as they want. If somebody says, no, I'm done with letting you use it, it stops there?
Yeah, we have terms that are during the active subscription period. So people can use it when they have it, and people are getting paid when the video is being used.
Do you have a model which kind of shows that you must? I mean, you raised, very impressive, you oversubscribed $6 million. You must have a model. And what does that look like in terms of revenue and years, to profitability and that sort of thing?
Yeah. Actually, before fundraising as a business owner, it was really important for me to achieve profitability before we had raised.
Oh, wow.
It just brought...
So you're already profitable now?
Well, now that we've raised, we're going to be investing a lot more in a lot of really cool, fun projects. We have such incredible investors that have come into this round, very high character, intelligent Canadian VCs, Stand Up Ventures, Green Sky, Version 1, EQC Capital, and Ange Quebec. So I'm very honored to have these guys around the table with us and to have our name next to theirs. We'll be using that to invest in some really exciting new projects.
Very, very impressive. So do you guys have ideas of IPOing at some point in the future? Yeah?
I would hope so. I mean, I don't think you kind of get into this business without having lofty goals.
Right.
But ultimately, my goal for the company and the thing that brings us the most joy is when people feel like they're having a fun participatory experience in tech. We're not looking to build an app to get people addicted to their phones. We're actually trying to get people outside filming memories in their life and be able to make money off of it.
So a better work-life balance than maybe some are doing. Is anybody else doing this sort of thing, to your knowledge, anywhere else in the world?
There are many incredible stock databases. What we do specifically is we really go after the everyday person, and we're making it as fun as we possibly can. So, yeah.
Okay, so no, how big a market do you see with this?
I think it can be very large. We have companies as customers that span all kinds of different use cases. Last week, I was talking to a customer who is starting a laundry delivery service business in his town. And so he came on GridBank to look for videos that felt really authentic of people literally folding their laundry in order to get the word of his business out there. So there are a lot of different use cases for video. We're all on our phones watching video all the time. So I believe it's one of the most important digital assets to exist right now.
But there's not a real an idea of a number out there, what it could be worth?
I don't know what I would be able to compare it to, honestly. We're looking to really change the way that people interact with tech. I want our people that are supplying their videos to GridBank to be able to make money in a way that maybe they can't make with typical social media apps right now. So that's really what our goal is.
And just want to sneak in AI. How do you filter that out, or how do you incorporate it? What do you do with it?
We filter it out. Right now, our main wedge is really dealing with this sort of like texture of real life. It really works for our customers. It brings a lot of joy to our suppliers as well. In terms of AI, I actually don't think AI-generated video is inherently bad. I think it can be a fantastic tool. There's some great AI-based artists out there. For us specifically, though, what we're really looking to do is just capture reality. And I'm not 100% convinced that AI-generated video as a sort of facsimile of reality, if you will, is really useful. Reality is good enough as it is.
Works for me.
Works for me. So you're doing basically Norman Rockwell's everyday life and bringing it to the world in a different way.
That's such a lovely comparison. Thank you.
Yeah, I know.
There's a bunch of people going home and looking up Norman Rockwell right now.
Exactly.
Laura, we got to wrap it up there, but thank you very much for joining us today.
Thank you so
We appreciate
much.
it. And coming up, that was Laura Lalonde, the CEO of Grid Bank. And coming up, today's market drivers with Bloomberg's Divya Balji. And of course, our phone lines are open. Greg Newman is taking your questions on North American equities. You can reach us 1-855-326-6266. Email us, first call at bellmedia.ca. Let's take a look at some of the early market movers, and we're joined now by Bloomberg's Divya Balji, managing editor for breaking news in the Americas. Divya, thanks as always for joining us. And Meta and CoreWeave interweaving another pact, eh?
Yes, that's right. I mean, interweaving indeed. They already had a pact that they had formed that was about for $14.2 billion. It was supposed to go out until 2031. This is where CoreWeave would be providing AI computing power, if you want to call it, AI cloud capacity, if you want to call it. Essentially, that was the original deal that they had. Now they're coming out and saying there's about $7 billion more that Meta is willing to spend, that they will be spending on this infrastructure pact with CoreWeave. They're extending the agreement out to 2032, so they're extending it out by a year. CoreWeave shares have climbed a little bit. I think the last I saw it was 4 or 5% in pre-market trading. It's good news. They're getting more money. They will be able to show that their neo cloud business is what they call it, is actually doing quite well through this whole pact that they have with Meta. I think it's also worth pointing out that Meta is a company that is going big on AI infrastructure spending. They have committed to spending about hundreds of billions of dollars on AI spending. This is a very burgeoning market when it comes to this so-called neo-cloud business for companies like CoreWeave, where a lot of other companies like Meta or tech giants are looking at expanding on their AI infrastructure and spending billions of dollars on it. And smaller AI companies like CoreWeave actually really getting into the market share right now.
And I guess I wonder if there'll be some more concerns about that circular spending that people are talking about when it comes to AI.
Yeah, I mean, I think, if you were to think about it, absolutely, all of this money that just sort of gets sloshed around, but, if you look at NVIDIA and how that circular spending has been happening as well, I think that's another place that people would be paying more attention to. $2 billion here with one company, $2 billion here with another company to invest, because they just have so much cash sloshing around. I think that's really the key here when it comes to this type of spending.
All right, we heard Exxon was struggling. Well, not struggling, but their production was down. We shouldn't be surprised. Chevron's running out of gas a little bit as well.
Yeah, I mean, and the numbers are fairly similar too. Exxon said a 6% reduction in production. You're seeing that same thing, that's what Chevron is saying. In terms of exact numbers, they're looking at 3.8 million or 3.8 to 3.9 million barrels of oil in production is what they're calling for the quarter. In the previous quarter, it was closer to 4.1 million. Of course, they're pointing to the production issues in the Persian Gulf and in Israel as being the reason. They were also talking about how they do expect to see an increase in upstream revenues thanks to higher commodity prices. That's raising their upstream revenues by, I believe, 1.6 billion to about 2.2 billion. So, sort of good news from that perspective in terms of higher costs. But there is what they call timing effects. Both companies pointed to that as to when they'll actually realize a lot of this revenue. That comes down to when it actually gets sold and whether it falls during that quarter or not. So, I mean, it's similar to what we saw in Exxon. It's truly not surprising, but it does give readers some insight before they report earnings in this upcoming season.
Okay, we'll wrap it up there, Divya, but thank you as always for joining us. Bloomberg's Divya Balji. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including cuts for the big three grocers in Canada. All right, let's take a look at some of the notable analyst calls and recommendations. First up, Empire, Loblaw, and Metro have all been cut to sector perform at Scotiabank. This comes at a time when the big three groceries have been facing headwinds amid slowing food inflation, consumers remaining price conscious, operating costs like labor staying elevated, and competition from the big guys, Walmart and Costco, keeping pressure on pricing. And from groceries to telecoms, the TELUS has been cut to hold at Canaccord, the analyst stating TELUS maintains a premium valuation relative to large cap peers, suggesting a higher performance bar must be met in what remains a low revenue growth environment. For more on this, let's bring back Greg Newman, get his thoughts on it. Talk about grocery stores. It's surprising. Like, you think those guys are licensed to print money, but they're right on the edge for profit, aren't they?
Yeah, you know what? I mean, first of all, they've had a few good years, and growth has been really good. And now all of a sudden, you're seeing inflationary concerns with, and particularly with this oil spike. And guess what? Inflation was a concern in February, as we found out in the recent March release, even before this war. So there's that. There's, valuations that just aren't as compelling. And you put it all together, where do they go from here? How much growth do they have? And on a price to growth basis, they're just not as compelling. And you know what? It's tended to be a bit of a crowded area. When people are concerned about, oh goodness, technology stocks are getting hit, where do I go? They go into safety stocks, or what they perceive to be safe stocks. Grocers are it. But you know what? It's never what you buy. It's always the price at which you buy it, which really matters. So I don't think that we're saying that they're not going to go up and be great businesses going forward. But from an investor point of view, is this the best time to buy them? No. And if you got them in a registered account, maybe sell a little bit and go into some of the other areas that have more upside.
Okay, and let's move to the telecoms and TELUS. Are there upsides there?
Well, yes, with each company in a specific way, but the overall is not been good. I mean, population growth has gone in the wrong direction. Interest rates have been higher than what we thought. These are very capital intensive businesses. Regulation has not gone in the right direction. Wireless has not gone in the right direction. Pricing discipline for these companies has not gone in the right direction. They keep undercutting each other.
You're really selling this right now.
Well, yeah. But the dividends, but each one has its own thing. Like BCE, the parent of this network, has an AI plan and has a U.S. avenue for growth. That could work really well on that stock level. Rogers has its spin out of MLSE, which could really add a few dollars of value there. TELUS has its tricks too, but TELUS also has the premium valuation. It's also got a new CEO who really might clear the deck. And I think, 50-50, they could cut that dividend like they did with BCE, which I actually think would be a good thing for the company. But so you know what? There's a lot of guys that have been beaten up on TELUS. I still like it with a near 10% dividend. Will that dividend get cut? Probably, but it's a great company with good long-term prospects, lots of irons in the fire. You want to buy them. There's closer to buy and there's closer to sell territory. You're never going to get it all perfect. I think there's more upside with TELUS than down.
And why would you like to see the dividend cut?
Their payout ratio has been stubbornly way too high. It's been a concern of investors for a very long time. What they really need is asset sales and balance sheet repair. And one of the best ways to do that is to cut the dividends. So, and I think a lot of people that are in the stock right now are not just, dividend investors. I think anybody that's surprised by a cut at this point hasn't been paying attention. So I think there's going to be very few people. And they might not cut it, but I do think they will.
All right. We'll wrap it up on that note there. When we come back, Greg Newman will take your questions on First Call. Time for first call, and our first caller is Daniel in Markham. Daniel.
Hi, Roger. Hi, Greg. Great
Hey.
host and great guest. My question is on Fairfax Financial. Is it a buy, and what entry price would you buy it? Thanks for taking my call, and first call, great segment.
All right, cheers, Daniel. Thank you.
Thanks, Daniel. Okay,
Fairfax.
so last quarter, Q4, very solid underwriting growth. Book value was up 19% year over year. 4.7% up quarter over quarter. This is great. Their earnings per share beat too. Underwriting much stronger, driven by global insurance and reinsurance. Our guys will say it still trades at the lower end of its 5-year multiple of 1.35 to 1.5 price to book. Not a demanding PE, about 8 or 9 times 2027, pretty reasonable. But from here, I don't see a lot of earnings per share growth. And we're always trying to look at, where's the best bang for the buck. This is not cheap. This is cheap. I don't think it's going to really hurt you. This was a top pick of ours, and we own it for investors. And, we were owning it towards $500. At $2,400, I think it's close to full value. So I wouldn't be buying more right now.
Okay, let's get into the emails. And this one's from Kurt. Can you let us know the outlook for Canadian REITs over the next 2 years, specifically Killam and Allied Properties?
Okay, well, these are great
Crystal
questions.
ball for 2 years.
2 years. Well, you know what? The REIT sector in Canada has been very poor for several years now.
It's been beaten up a bit.
Really badly beaten up. And there are money managers that are starting to lean into it as a contrarian trade and as a changing landscape. I think Killam is probably the best apartment REIT for the value. It's still, only growing maybe at 5 or 6% and trading around 17, 18 times price to AFFO. But for apartment REITs, which are an island of stability, that's pretty good. And apartment REITs have had trouble, because of lower immigration. But out there, the East Coast, it's been a little bit better. The other one was Allied Properties. Oh, gosh, we're actually they've had one thing after the other in terms of office vacancy. We all know the story of COVID. They had to do the distribution cut. They've had a resetting of the deck to a large extent. Where do we go from here? Well, we are actually seeing slightly better occupancy in Toronto now.
More and more people coming back to work, right?
Yeah, we are starting to see better that. And so the two in the office market that you're seeing a little bit more is Dundee Office and Allied. But and I think Allied's pretty cheap, but I still wouldn't be buying it yet. I think that there's but in terms of the Canadian REIT sector across the board, look, distributions are pretty good, balance sheets pretty good, and payout ratio is pretty healthy. So if you're asking me about the sector as a whole, it's got more upside than downside, and there are certain names in the REIT space that do look really good here. So, none of these are my most compelling names. But
What do you like?
I like Crombie. I like Crombie REIT. I like Storage Vault as an upcoming play. I think that there still needs to be some catalysts. I still like the seniors. They've been top picks of mine, at $9 Chartwell, 22, 23. The retail names are kind of more interesting in terms of valuations. Smart REIT, RioCan starting to look a little bit better, more upside than downside. But are any of them as compelling as an NVIDIA right now? No. But they're paying you really well to wait.
Okay, we'll leave it on that note there. This next email is from KD. Good morning, gentlemen. What is your guest thoughts about Brookfield Corp and Brookfield Infrastructure? Is it time to hold or buy more?
That's a great question. I think two things. First of all, I usually get a question about BN versus BAM.
Yeah.
And then the question is private credit and BAM. And BN is great. It's the whole thing. On a price to growth basis, it's not bad. It works well. I think you can buy it at these levels. It's if we're right that you want to be constructive on markets here, that last week was probably the bottom. And if you're looking for a great Canadian company that's going to do really well at a reasonable valuation. I think BN is it. BIP.UN is great. Inflation-linked revenues, rising distribution every year by 5 to 7%. Great combination of organic growth plus M&A and recycling capital all the time. I really am a big fan of BIP.UN. Of course, you want to buy it at the right time. I think now's a great time to be adding to that one as well. So those are two go-to names.
All right, we've got about 30 seconds. We'll get this last email in from Sam. Opinions on CAE.
Well, the defense sector has been, is a great area to be looking now. Of course, in their more civil area, aviation, that's been really challenged and a trouble spot. But we think that they're really turning the corner. They've taken some tough medicine. I think that they've sobered up here with probably higher oil prices and markets coming down. At $37, I say that price to growth, this stock never gets cheap enough like an NVIDIA, but on a price to growth, but it's still pretty compelling here. So yeah, you can buy it.
Okay, we've got to wrap it up there. But Greg, thanks as always for joining us, sir. That is it for us here on the street. Thank you again to Greg Newman, Senior Wealth Advisor and Portfolio Manager at Newman Group, Scotia McLeod, for joining us today. Andy's up next with the Open. Trading gets underway about 30 minutes from now. Have yourself a great day.